It's your boy Trading with Trav, and you are now tuned into a new episode of To the Moon. And here on To the Moon, we go over an array of financial topics. We deal with real estate, we deal with stocks, we deal with crypto, we deal with forex, and pretty much anything related to finance. On today's episode, we're going to be taking you through step one. So for step one, whether that's you getting into the stock market, real estate, there are a few things that you definitely want to keep in mind. And to further expound on that, I brought along with me a few of my friends. You all remember the real estate guru, Miss Brittany.
Hey y'all, I'm back.
And for the first time, we have Mr. Steve, the all-around personal banking. He is our banking guru, and he's going to help us out with giving us some banking tips and gems. And the long-awaited forex general, we have Mr. Brandon. That'll be helping us out today and giving us some gems and some how-tos to how to get started into forex. So first of all, I want to thank each and every one of you guys for coming out today. I know y'all very, very, very busy. So again, the To The Moon community is happy that you guys are here. How are you guys doing today?
Excellent.
Feeling good,
Can't
man.
complain, man.
Thanks
Can't
for having
complain.
us. Thanks for having us.
Nah, not a problem at all. Not a problem at all. So I'm really interested to get you guys' perspective today on taking the first steps. On the last episode, we talked about generational wealth. We touched on just how important the mindset is to any investor, or really to anybody that's dealing with finances or looking to improve their finances. So today we want to take it a little bit step further and create some actionable plans for everybody, more or less. So we'll start off with Brandon and Forex, just because that's a lot newer to a lot of people.
And I'm very interested.
And a lot of people have a lot of misconceptions as it relates to Forex.
Break it down for us,
so we're hoping that you can kind of clear up a few things for us today, and then also, again, leave us with maybe a tip or two that, if we wanted to get started, what would we do, where would we start?
Definitely. So first thing I want to dispel is Forex is not a get-rich-quick scheme.
What?
Okay, wait, I don't want to hear about it.
I thought if I gave you $100, just
You can lose that 100 just as fast. Everybody thinks they're going to put in a little bit of money, hit the jackpot.
Right.
That's not the right mindset to have.
Right.
Just like going into the stock market,
Right.
it's a risk always involved. So you want to be prepared mentally first off.
Right.
You need to do the work behind the scenes, study the markets, understand what you're doing and why you're doing it, trade that paper account, and then start trading the real money.
Okay.
So once you start trading real money, you do have a potential to see large gains.
Okay.
And I actually trade full time. That's what I do as a living. And I'm a professional or funded trader. So I don't even trade my own money. So the good thing is when I lose my money, it's not my money. And when I win the money, it's a lot bigger. So when you get qualified enough and you feel like you're comfortable enough taking trades, you can actually just take a test and become a funded trader and trade a propriety firm's money instead of trading your money.
Okay, that sounds dope. So I got a question for you, because one of the things that, and I'm sure we maybe all got an inbox or two from somebody that was like, trying to get us into Forex, I guess you could say. So I guess what are they pitching versus like more so the reality of Forex?
So everybody's been involved in that or has someone in their inbox.
Right.
Namely, the big companies are IML or B technology company. But what those companies are multi-level marketing companies, not Forex companies. Okay. So they mask the multi-level marketing as a Forex educational system. But if you remove the education, which they don't really want you to do because they want you to stay addicted to the platform, you're just left recruiting to make money instead of just making money from the market. I actually was in IML for about a year and a half. I got out of it what I needed because the information is there. It's just a lot of noise and people's focuses are elsewhere. Their goal is not to teach you to be an independent trader. That wouldn't make any sense. If everybody who joins becomes professional, no more company.
Right, you can't make any money like that.
Yeah, exactly.
Brandon,
So
I want to ask a question because I would like you to please explain Forex in general for everyone, because there's probably some people here that are like, what is Forex?
Yeah.
How exactly do you get into it? Is it a paper? Is it how do you do it? Like, can you give us the layman's on it?
Yeah, definitely. So forex is basically you trading currencies at the different prices that they are in the market due to inflation, due to different political causes that may be happening. So to make it simple for everybody, if you were to take a trip to Mexico, you would then exchange your US dollars for the Mexican pesos. And let's say you have 100 US dollars and they give you 500 Mexican pesos because the Mexican peso is so much weaker than the US dollar.
Right.
And then when you go back to America, you take that same $500 in pesos, and you exchange it, but this time you get $120. Right. You got more money back because the exchange rates between the two currencies changed in favor of the dollar. So whatever that stronger pair is, you just made money that simply. Okay. So before the advent of the internet, really, it was really hard to get into forex, and you had to actually be in New York or California. But now you can just trade on your laptop. You can trade at work. You can trade on your phone.
What intrigues me about that is it's 24/7, isn't it?
24/7, except for the weekends.
Okay.
Yeah, so like Monday through Friday, 24/7. Closes on the weekends, but the foreign exchange market is still open because people are still traveling. Yeah. Countries are doing business with each other. Yeah. So the money is constantly flowing. It never really stops.
Yeah.
Exactly.
Yeah. That's pretty dope. I like the fact that you just mentioned like the education piece of it, right? Because in each of our areas, banking, real estate, forex, stocks, education aspects of it kind of, go under the table a little bit, which kind of make me want to, just kind of chime in with Brittany and real estate, and just kind of understanding. Brandon talked about just understanding the market before you get into it. How big is that with taking that first step, or would you say should you look in other areas first, like your credit, or should understanding the market, looking at houses, what they're going for? I guess where should you start? I guess if you're brand new to that process.
If you're brand new to the process of purchasing a home, you definitely need to start with your credit. First and foremost, your credit is king. Anybody that's following Real Estate Thursdays, because y'all know that's my favorite day of the week, I always talk about how credit is king, right? That's the most important thing. Right. So yes, you absolutely need to start with credit. Credit will dictate the loan type. It will dictate your interest rate. Yeah. It's going to dictate PMI. It's going to dictate so many things. Once you actually have the pre-approval, which is based off of your credit, then we'll know how much money you're going to have, and then you can begin to understand the market, because the reality of the situation is if we don't know how much you're approved for, we can't look for anything, right?
We dreaming.
Everything, right, it's a dream. And if you're looking to speak to me, I'm not talking to you unless you have a pre-approval, or I'm sending you to my lender to get you pre-approved, because, just like everybody else, this is my job. We as realtors don't get paid until that house actually closes. So it's important that when I'm talking to people that they already have that piece of that pre-approval in place. Because if you don't, then I can't really do anything with you until you're ready. Right. And people contact me all the time, and I send them, and I always tell them the best place to start is making sure your credit is where it needs to be. Right. Right now, I would say understanding what's going on, not even in the market, but just in the financial economy, I guess if that's the best word to use, is that interest rates are at an all-time low as far as that is concerned. And there are actually different lenders that are funding and lending with some pretty, I'd say, all-time low credit scores.
Yeah,
absolutely.
What's the required credit score?
Right now, the required credit score for most, like if you're not going with a specialty lender, right? We're talking about higher interest rate. Interest rate right now is running about 3.5. You see, that's my average. It's not it fluctuates on a daily basis, but about 3.5. So most lenders that are, let's say a traditional lender, they want to see you at about a 620. You can get FHA approval for that. If you want a conventional loan, obviously you're going to need to be a bit higher than that. But FHA actually offers so many benefits to clients. I like that. Conventional, a lot of times you have to put on a lot more money. Right. And sometimes people aren't in that position to be able to put down so much. Yeah. So
with FHA, you can also, 620 is usually the the credit score that you need for standard conventional home loans. Okay. So if you're a first-time home buyer looking to get to these programs that the bank offers, right? You may be surprised. So I always tell people the step one is to go talk to your bank. If you use a bank, go talk to your banker because rates are at an all-time low. These bankers and these banks are itching to get you into these loans. That's how banks make money.
That's how they make their money. Right.
When the rates are low, it's a prime opportunity for you as a consumer of that bank. Hopefully, you all have checking accounts, and that's really basic. Like back to the basics. Get your checking account, establish a relationship. But if you are in the market or you think you want to get a home, like go to your bank and see what you need. Because even if you don't qualify, we will tell you, hey, here's your paper. We weren't able to approve you today, but here to step 1, step 2, step 3 that you need to get together and come back and see me. So why it's super important to establish a relationship.
I think that you just touched on really for me a key piece is that it's a relationship. Absolutely. And it's not like a one-time end all. Sometimes we get a little discouraged, right, if it doesn't maybe work out the way that we intended. But keeping in mind that it is a relationship, so that if it doesn't work out that initial time, you can come back, and try again, dust yourself off and try again. So definitely keep that in mind. I know you kind of walked us in there a little bit, Steve. So I appreciate you jumping in there. Thank you. But can you maybe even just expand a little bit more on just maybe the importance of like the relationship of a banker, or even just the importance of actually setting up a checking account? Because
it's huge. It's huge. So I want to talk to people because it's about 14 million people in America that are what we call underbanked or unbanked. Wow. And that's the people that don't have a standard checking account. Wow. That's the people that are using check cashing places to cash their payroll checks. The only way that they're transferring funds is through Cash App, or they're actually just holding cash, right? And a lot of people will do that. But we talked about the importance a little bit earlier before the session about having a paper trail. Absolutely. So establish yourself with a checking account, because when you do go to your bank or you do go to get approved for a loan, and say you do get approved because your credit score somehow is decent, when you go to purchase a home, the research and the things that you have to provide behind that is very in depth. So if you just put $10,000 in the account and you don't have a source for that $10,000, right? Or if it hasn't been sitting there long enough where they're not going to ask you where it came from, then you won't get approved for that loan, or it's going to hold you up. So the importance of having a bank account is key. Just very, very basics. Set yourself up with a checking account. A lot of people don't, want to use the banks because of experience or things that they've had in the past. But ultimately, just understanding the rules of that checking account. Try to keep some funds in that checking account. So if you get a payroll check, don't just, hey, my direct deposit came, I'm going to take it all out. Mm-hmm. Try to operate within that checking account, right? Mm-hmm. Learn how to budget. Learn how to, learn how to look at what's coming in, and then create your expenses, see what your expenses are, to budget, to say, okay, at the end of the month, I want to have this much left over. At the end of this 2 weeks, let's start basic. We get paid every 2 weeks, every week. How much do you want to keep? Mm-hmm. And then talk to your bankers, like we were talking about, relationships. That
very key. You said the big B word, budget. A lot of people don't like to hear the word budget, but it's extremely helpful in really creating that plan for you to get to the next step. You know what I mean? If you're someone who maybe, you just kind of looking at, the content from scratch, right? Start with a budget. Even if you feel like, I know where all my bills got to go and what bills, like start with that, because then you can kind of clearly see what's a need, what's a want, what can you go without, what can you wait on, and things like that. And then it ultimately allows you to get to the point where, like, you can purchase a home, you can get into forex, or you can get into the stock market, right? And with the stock market, like Brandon said, once upon a time it was extremely, extremely hard to get into the stock market. Like, you had to give X amount of dollars to a person that you probably never met. They send you a thick packet. Like I still got one of the Wachovia, Schwab packet, Charles Schwab packet, thick packet. And they're giving you all of this stuff, and you're like, what is this? So it's advanced a lot, right? Since those times to where you can actually do it on your own, and you can start really right away, like right after the show ends, right after you subscribe to the show.
Yes.
Then you can go ahead and you can actually download different apps such as Robinhood, such as Webull, TD Ameritrade. Those are just going to be different platforms that you can use to begin your investment journey, right? The great thing that I love about it is you don't have to start with like a certain dollar amount. Like some people feel like, oh, I have to have 1,000, I have to have 500. There's accounts that you can start literally with $10. As a joke with one of my friends, I started an account with $16. And 3 months later, we're close to like $400 or $500. And that's just simple investing, right? Not, trying to catch every wave, right? Just choosing things that are solid, that allow for growth over time. And that's one of the key things to getting started is just kind of knowing where to go first and foremost, and then understanding the mindset behind it. That it's not something that, as Brandon said, that you're going to get rich overnight, right? You have to realize that there's a process and more or less enjoy that process. So that's the get going a pitch, I guess, if you will, with the stock market. So now that we kind of touched on some of those first steps of getting involved into these very areas of investments, let's maybe touch on a little bit of the things not to do, right? So for me with the stock market, right, one of the common things that everyone asks is, what stocks can I pick? Like, give me a hot stock, you know what I mean? Which I get it, right? Because no one wants to, miss the wave, right? But the best way to invest is the long-term game, right? So I have a strategy that I adopted from one of my mentors, Ian Dunlap. So if you're seeing this, I'm not stealing your material. But to use 2 ETFs and 2 tech companies, right? It's very simple, right? But if you think about it, like a company like Apple, a company like Facebook, just anything tech-related, Microsoft, those things aren't going anywhere, right? So for the next 10 years, you can more or less bank on those companies giving you continued gains versus you trying to chase down the next AMC or chase down the next GameStop and dealing with those big highs and lows.
That's a question for the viewers, right? Because you said ETF. Like, what is that? What is that?
I love that you asked that question, right? So ETFs are exchange traded funds, right? And if you've been following me or the content for any amount of time, you've heard me say that phrase a number of times. So really quick, in short, what an ETF is, let me ask you guys this, right? If you had the option to start a basketball team, right, would you start with just LeBron James or Michael Jordan or Kobe Bryant, or he said Kobe Bryant, I can't even, or would you rather have an all-star team?
All-star team.
Simple, right? Right. That's what an ETF is, right? An ETF is a collection of stocks, right? So instead of you riding the wave with like even Apple or Facebook, right? Even Kobe got hurt. Even LeBron, got hurt, right? So meaning even Facebook is going to have a bad day, right? Even Apple is going to have some fluctuation, right? But when you have an ETF, you not only have that, you'll have PayPal. Like let me go back. One of my favorites is QQQ, right? And it's a tech ETF. So again, QQQ, something that you can do right after you subscribe, right? So with that one ETF, you'll get PayPal, Tesla, Google A, Google C, NVIDIA, Intel, Facebook, Apple, Amazon. So you're getting a multitude of companies as opposed to just picking one. And if you were to try to purchase all of those individually, you'll be out thousands of dollars, right? So for that one ETF, you're looking at around $350 to get ownership of all of those companies as opposed to just picking one.
Quick question. And if they wanted to do that, which I know you don't want to give too much, but they could go to any of those ones that you described, such as Robin.
Yeah, absolutely. So
this QQQ.
Yeah, absolutely. So yeah, the Webull, Robinhood, those are brokerage platforms, right? So yeah, so they allow for you to buy and sell. And yeah, absolutely. You can find QQQ, you can find SPY. I'm giving you a game. You can find Jets, you can find,
yep. One more, you must subscribe. Sorry, I had to cut him off.
So, and that's all I can give you for that portion. But rewind the episode is definitely a few stocks that you can get started with right away. Definitely do not forget to subscribe, right? So so again, we just resetting the room. We were just going over do's and don'ts, right? And so we just kind of want to breeze back around the table of do's and don'ts in forex.
The big do, I would say, is find yourself a mentor. Find someone who is more qualified, more experienced, and has some success in the trading that you want to do, whether it be in the stock market, whether it be forex, whether it be in real estate. Find someone who's knowledgeable and pay them for their time.
Absolutely.
Pay them for their time. You will get a huge benefit from that. That was probably the biggest benefit I got when learning forex, was getting a mentor who knew how to do things I didn't know and could guide me through mistakes that she already made and tell me to look out for roadblocks that were going to be in the road and things like that. The thing you should not do is gamble your money away. Do not gamble your money. If you go into trading with the mindset of, I'm going to hit a lick, the market gonna lick you.
You'll be the next hit.
That'd be the same. No, that's the same thing over on the stock side. Like you know, you try to come in too quick, you think you'll pay for that lesson.
Don't let your emotions get to you. Even when you start seeing some success in the market, don't let that get to your head. Because there are people with more money and more experience than you who really control the markets. We're just playing the game. So you gotta play smart. Do your homework.
I like that. Very, very, very good. Steve, you drop some do's and don'ts if you don't mind.
Mine is very simple. The big do is establish the basics. Establish some savings. Establish a checking account. Learn how to use your debit card and budget. Right. So learn how to make do with what you have and learn how to save within your means. Right. Learn how to look at your account and say, I only have this much to spend, and I will have this much at the end of the month. The big don't is don't go without a traditional banking account. I know that some people do not want to put their money in the banks. Do not go without, because you will get nickel and dimed on every transaction that you make through and I hate to say this, because Cash App. You getting every time you get somebody sends you money and you want it instantly, so you're gonna pay that that extra 1.5%. Yep. And if you have any of these other transactions, the banks do have their own kind of instant trade transfer services like Zelle that does not cost you to actually have instant access to your money. So just make sure that you understand that when you get a paycheck, it's better to deposit that paycheck even if you got to wait a few days for it to clear, or get direct deposit instead of taking that check to the check cashing place, because that's that same percentage that they're taking from you. So with very, very basic information, but don't let anybody take your money that didn't work for it.
Yeah, that's it. I like that. Don't let nobody take your money that didn't work for it, because that's definitely what they do. I just had to accept the Cash App and lost like $5 just 10 minutes ago. So I'm gonna listen. Just say that. And then Miss Brittany, if you could give us a couple of do's and don'ts on the real estate side.
Absolutely. And for real estate, I'm always so confused. Like, should I be talking to people about buying houses or people that are interested in getting into real estate? Because I get, questions on both sides of that. I'd say for purchasing a home, I'm going to have to piggyback with my brother Steve over here and say you need to have a bank account. That is the number one do. I can't tell you how important it is for you to have a paper trail, as he's explained, for you to show a consistent bank history. Even if you're getting payday loans or anything like that, I'm sure they always want to see your bank statements. They want to see some type of paper trail on how your money is being deposited. Also, I have to piggyback with my brother again and say that keep your money in the bank. If you're looking at wanting to purchase a home and for you to get credit for what you're paying, they need to know where the money came from. So you need to be able to pull that out your bank account and be able to then produce a record showing this is where it came from,
Right.
so that you can get these credits for all these programs that everybody wants to take advantage of. So it is very important to have that. I'm also, right with Travis and Brandon in saying that we really need to make sure that you save. Also, I think one common misconception is how expensive or how inexpensive people may think it is to purchase a home. It's very expensive to purchase a home. When you take into consideration your earnest money should be about 1% of the purchase price. So, that could range from $1,000, $2,000, $3,000, depending on the value of that home. You also have to pay for your inspection, your appraisal, things like that that will come up. So, we're talking a couple $1,000s that you need to have ready to go, and these things go very quickly. So you do need to have savings. I would say the don'ts are, don't get yourself into something that you can't afford. Just because the bank pre-approves you for $500,000 does not mean you have to get a $500,000
Don't max
house.
it out.
Don't max it out. If you have credit cards and car notes, it may look like you could do that, but could you really do it?
Right.
You want to make yourself best suit. You want to be as comfortable as possible. You want to be able to keep your home for that full 30 years. Right? And hopefully we're not doing 30 years, because if you're one of my clients, I'm telling you to pay more, get that, principal down so that, you get on the flip side of that. So it's just those things I would say. Exactly. And if you, it is the game, right? Isn't it? It is the game.
Say that one more time.
Equity is the game.
It absolutely is.
For sure. Definitely. Well, we definitely appreciate your time today. That is all the time that we have. I hope that you were able to get some useful information, some information that you can take advantage of, put into use right away. If you are interested in receiving more content, please follow us on Facebook at To The Moon, 2 exclamation points. That's To The Moon, 2 exclamation points. We are also on Instagram at To The Moon Investments. So definitely check us out. And until next time, be safe, be smart, and be dangerous. We out. It's your boy, Trading with Trav, but today we'll be taking a look at the To The Moon live event. Now, if you haven't already done so, you definitely want to be sure to get your tickets while they're available. At this event, you're going to leave with information about your credit. What are the best ways to make that better and improve that score as quickly as possible? You're going to leave with information about the real estate market. What's going on in Wisconsin and how can you take advantage of it? We're going to give you presentations on crypto, NFTs, life insurance, and of course the stock market. Again, you do not want to miss this event. It's going down on January 29th, Milwaukee, Wisconsin at 3 p.m. You can get the tickets at Eventbrite just by searching To The Moon Live. Again, that's TOOTHEMOON Live. Don't miss it. Hope to see